So I've been saying for some time that we wanted to pay attention to the Dow, to the diamonds. And so this is from this morning. This doesn't contain any of the data from intraday. In fact, let me do that. Let me just go run $DBH and then just go run DIA. And we'll just let this chart populate here real quick. So this is the one. While that's calculating, while the squirrels are doing what they do, you can see that it just gets, progressively weaker as we go out in time. Now remember, the Dow ETF, the diamonds DIA, is a weekly on Fridays, right? So this is out on March 14th, and you can see March 7th, etc. Here's February 28th next week, right? A week from today. But when you see all of these really starting to collapse down through, that's a very clean indication that perhaps you should be looking at something. Now, what I did is I actually entered this position short with a put vertical, and the idea behind that was because of what we were seeing here. This trend. You can go back and you can run literally DBH DIA in the search, and it'll give you all the instances where people have run that. Plus, it's also part of the automated channel. And what that means is that we every day we update this and post those charts. Why this is important to you is that this has been showing weakness for some time in the Dow Industrials, and we've been noting that in the morning notes. So I went ahead and again I opened up some put verticals to the downside. I opened up the 445, 450s, and what they look like is, let's see if I can call that up without crashing the system here. Okay. Yeah, so they look kind of weird here. Let me grab a screenshot so we can talk about this. And I'll post this chart in voice so that we can see it also. The idea here is to take advantage again of a decrease in the Dow, and I'm in the 21 March, which is the monthly for this. So 4 weeks out again. And here, let me grab the chart and post in voice so you guys can see what I'm saying. I'll also share it on my screen, but just give me a second. Okay, so there's the Dow. So the idea behind this is, here, let me grab this. Okay, so the idea behind doing this is that, again, if you think the Dow is going to go down, and we have all the indications that it probably was going to go down, then you can take advantage of that. Now, each of these lines is an interim line, and you can see that with where I am in my P&L, I'm almost at 50% of my max profit in this. And so this is actually probably not a bad spot to start thinking about taking some of these off the table, right? Unlike my UNH, which was way down in the profit, right? And it's very difficult to get out of that. I would be satisfied with a move of 50% down at this level. And then given literally what we were just talking about, these are headed down, and we may stay down here for some time. It does look like that. So this would be, this is today, right? So this is, you can see February 21st is indicated down there. And then for next week, it's actually looking like part of this will release and come back onto, quote unquote, a little bit more bullish with a degradation across time. Now, we don't know what the trend is going to look like overall. And so we want to be somewhat cautious that if you held on to this, you could potentially lose your gains. Here's today's, by the way. Let me just open this up so we can see it. You can see a huge bar to the downside, right? and all of those have dropped down. So whether you take profits or not is entirely up to you. This is pointing to the end of today, and then this is pointing, and you can see how things have dropped and remain very bearish at this price level. Things get bearish. So the trade here was recognizing that the out weeks, and this is from this morning's, but you can go back in time, realizing that the future projection of delta balance was anticipating some downward movement in this. It wasn't, necessarily just railed to delta balance equal 1. And we were seeing the general increase. So the red line here is the left-hand plane. That's out of the money puts and in the money calls. And so increasingly at this price level into the pre-market this morning, we were seeing increasing drop of the power of the in-the-money calls relative to the out-of-the-money puts, expiry over expiry over expiry. That's the red line. And then the green line here is the right-hand plane, right? So this is where we have in-the-money puts, which already are negative delta, of course, because they're, for all intents and purposes, they're, we presume long and then we adjust for short interest. But dominantly, we have in-the-money puts, and then less and less calls. And then when we see this is the right now. So this is just 1317 and it's 1323. So this is 5 minutes ago. You can see that the huge bar to the downside has captured far more puts, and it's driven all of the deltas into the ground here. And so this is telling us that even the out weeks, right? So we've got next Friday, we've got the following Friday, and then beyond that. And this isn't even the monthly. The monthly is the 21st. We're looking pretty bearish at these price levels. So what we would be looking for is that we would want to see, if we were a bull, we would want to see these numbers start to trend upward, where in the out weeks people were starting to close their puts that they have right now for these expiries and add new out of the money calls, which would bring these numbers up and potentially could bring the delta balance of the forward looking weeks out. We're not there, right? So this major drop in the Dow is basically telling us, for all intents and purposes, that at these lower price levels, we've captured a lot more negative delta. We've rejected a lot of long delta from the calls, and that's dropped everything down, and we will tend to remain here. So whether I take some of my my contracts off the table or not is TBD. I don't know. I'll see how we fare the day. Don't let a winning trade turn into a losing trade, meaning if you have something like this set up and knowing that you're at about 50% of your max profit, if you did multiple contracts, and I would urge folks, do that if you can, if your risk tolerance allows you to do it, and just your account size allows you to do it, then take some of these off the table, and as you melt upward here, you can just use the theta decay as price kind of wiggles in this area. You'll still approach the terminal value, which is this blue line right here. And again, don't let it go negative, because if price were to aggressively start pushing up, you're going to be on these curves coming down here, and that's probably not a good place to be in something that is equity settled, because you might not be able to get out, or you might not get the value that you want out of there. So hopefully this helps. How I use DBH and entered some trades to take advantage of just kind of the topping formation that we were seeing, right? So we talked about that. Let's go back here. Let's go to this one. Yeah, so we had this topping formation. We've been, kind of range bound. We've gone up, we've gone down, we've gone up, we've gone down. We cut through here, which is clearly bearish, and now we're in this linear down pattern to take advantage of, that decrease. So no crystal ball, just basically using the tools to, to develop a thesis and go from there.